Alrighty, good morning. My name is Sean Dex and I welcome you back to the Mango Grove, where we keep it easy, we keep it stress-free, and we capture the big wins. And the reason we are able to capture the big wins is because we are always looking at the holistic picture. And the holistic picture at the moment over here, guys, is telling us that we have tailwinds showing up on the macro scene. So in today's video, we will be talking about macro, and many of you guys are going to be zoning out. Many of you guys are going to be tuning out. Many of you guys are going to be saying, hey Sean, just tell me what targets to look for. I don't really care about what's going on with oil, what's going on with the 10-year, what's going on with DXY. I don't care about any of that. Just tell me when to buy and when to sell. And if that's what you're looking for, I suggest simply unsubscribing right now. If you're not looking to learn, you are in the wrong channel. Mango just ain't for you. Mango is about constant, everlasting learning. Those of you who are actually looking to learn, this video is for you. The rest of you, you guys want to stay poor forever. You guys want your bosses to take advantage of you forever. Go ahead, unsubscribe, leave a hateful comment down below as well on your way out. Let's go ahead and get started. We're going to be looking at oil. Now, we haven't looked at this in a while. I think the last time we looked at this was during a live stream where we marked out this resistance zone over here, and we had two targets, right? Target 1 coming around 92, target 2 coming around 99-ish. Now, you guys can see how well TA works even in TradFi markets, right? Oil over here smacked right up against our resistance level, went ahead and lived above it. We're looking at the 4-day time frame, by the way, guys. Okay, the 4-day time frame, the Mango time frame, we lived above it for a bit and then got rejected hardcore. And then the big bullish sign over here was us breaking underneath this support level, right? Breaking back underneath it. Now remember, guys, oil going up is actually bearish for the markets because it tightens financial conditions, okay? Oil going up, just like yields going up, is a tightening on financial conditions. So over the past while now, like freaking months, we've had oil going up, yields going up, and DXY going up. All three of those. Go ahead and note them down. Oil going up, tightening of financial conditions. Yields going up, tightening of financial conditions. DXY going up, tightening of financial conditions. And if you guys go ahead and look at the charts really quickly, the yields have been going up, right? This is the US 10-year, again, the 4-day time frame, the Mango time frame. 10-year has been going up. DXY, same story, up, right? But now we are seeing all three of these charts actually come down, right? Oil gapped up though on the most recent 4-day candle, and this has a lot to do with what's going on with the Israel and Palestine situation. So what we are looking for on oil is a close back underneath the support zone over here, a close underneath 83. If we see that over here, it's gonna be bullish for crypto, right? But it's only one piece of the puzzle. We want all three pieces, right? We want US oil, we want US 10-year, and we want DXY to all start coming down. That's gonna give us the tailwinds that we're looking for. And again, to quickly explain what a tailwind is for those of you who don't know, but let's say you have an airplane going upwards like this. If you have tailwinds, it's going to push the plane forward a lot easier, right? It's going to make its journey upward a lot easier as it ascends to the moon, to Bitcoin going to $1 million. But instead, if you have headwinds, it's going to make life very difficult for the asset to keep going up, right? In fact, if the headwinds are strong enough, we may actually go down. So yeah, that's just essentially what people mean when they use jargon like tailwinds, headwinds. Don't let it intimidate you. And if you guys have any questions in regards to any jargon whatsoever, just ask me in the comments down below and I'll make sure to explain it in the next video. All right, so now going back on over to oil, but we're looking at the daily time frame. You can see that we did put in a toppy formation at around the target level, our target 1, right? T1 coming around 92. We broke the neckline and we're on our way down, got supported on the dynamic. I am now using the volatility method of the dynamic a lot more. You can see that we bounced off it. We're looking for this to be a lower high. This would be your top, right? This would be your low. We're looking for this to be a lower high. Come in and put in a lower low. We will know that this is our lower high as soon as we take this low out over here at around 82. So oil breaking 82, or just to make your life simpler, guys, just look for the dynamic level at around 80-ish to be claimed, okay, by the bears. So we want oil to close underneath 80. If we do that, it's going to be really good for risk assets in general, and crypto is a risk asset, right? So that's what we're looking for, oil to break down further over here, back underneath that neckline. So now on over to the bond market, okay? Over here, we're looking at the US 10-year yields, okay? Remember, guys, yields going up is, again, tightening of financial conditions. It makes borrowing a lot more difficult. It makes people's existing debt that they had to roll over that much more painful for them to service. So yields going up is actually bad for risk assets, because the more they have to pay towards their debt, the less they have to buy Bitcoin with, less they have to buy SPY with, right? So yields going up is bad, okay? Yields coming down is good. And we are seeing signs of this potentially topping out over here. Not there yet, okay? If you're looking at the 4-day time frame, all we have going for us over here is one, that this looks extremely extended. It's really far away from the dynamic over here. And the further we live away from the dynamic, the more likely the move down is going to be very, very aggressive. You guys can see over here too, right? This move, right? Really aggressive move. We are further away from the dynamic and got sucked back down to the dynamic, got supported over there, and then rise again. This move down, okay, all the way from around, let's say 4.87% to 3.7% is significant. This could be a massive tailwind for risk assets and thereby crypto in general, right? Bitcoin, altcoins really need this. More than Bitcoin, guys, altcoins really need this to happen. We want to see this to come down. So at the moment, what do we have going for us in regards to wanting this to come down? Well, we have this rising channel over here that's kind of looking weak towards the top of the channel, right? On the 4-day time frame, just using a simple candlestick analysis, we've taken out the low of the previous candle, okay? That's good. That's good. Is it enough? No, not yet. But if we zoom in on over to the lower time frames, the daily time frame, you can see that the bulls, the risk asset bulls, have something to look forward to over here, right? We have a really nice top P formation over here, a double top, an M-like formation, breaking the neckline. This could simply be a retest of that neckline and then further continuation towards the downside. All we want is for this to start trending down. As soon as this starts trending down, the market is going to start placing their bets on risk assets, that being Bitcoin, altcoins, SPY, NASDAQ, etc. Right? So again, over here to summarize, we have US yields also putting in a toppy-like formation. We have US oil also putting in a toppy-like formation. And then what about DXY? DXY also kind of putting in a toppy-like formation, but it's the same story. US yields and DXY kind of have the same play at the moment, where they're really far away from their dynamic level, right? Out of equilibrium completely. And guys, again, similar to US oil, you can see how well DXY has played on TA. Let me just go ahead and quickly hide the dynamic. You guys can see that we met the measured move of this falling channel to the T. How do I get the measured move? Simply measure the width of the falling channel, right? So right over here, I use this length over here, and we can go ahead and mark it out on the break. And you can see that it doesn't need to be perfect, but this time it was actually pretty perfect, right? We hit around 107-ish, and now it looks like it wants to put in a top over here, right? Now we wanted to put in a top. We don't know if it will, but if it does break the support zone over here, I'll be looking for this to come further down. Now on DXY, instead of looking at the daily time frame, I'm going to go up one level and look at the weekly time frame. And the weekly really looks toppy, right? Look at the previous candle over there. Extremely ugly, and we have taken out the low of the previous candle. So we put in a toppy candle, right? You can just look at the psychology of this candle. The market tried to push up higher, and it said nope. The market was rejecting any price at that level, right? You can see how the market was really aggressive into selling. When you see a wick like that, right, a red wick to the upside, that's bearish, right? But we don't get that confirmation on the bearish until you see the next candle as well also be bearish. And one of the ways to look for that, guys, is looking for the low of the previous candle to be taken out. We're seeing that on DXY. We're seeing that on US 10-year as well. And on US oil, we saw that play out on the previous week, right? A toppy candle over here, a doji with a big bearish candle on the next week. Now, all three of these are tailwinds, okay? US oil coming down, DXY coming down, and we have the US 10-year yields coming down as well. So with these tailwinds, the big question is, are the crypto markets reflecting it? Well, let's go ahead and take a look at the Mango dashboard. We're going to go ahead and use the drop down on Bitcoin so we get a good overview at the trend profile as well as the volatility profile. You can see the trend profile is looking pretty good, right? Just by glancing at the colors. There's only one red, 3 greens, and 2 grays. Overall, looking really good. The daily is long, the 2 days long, and the weekly flip long 1.5 days ago as well. The volatility is really low, and volatility compression leads to volatility expansion in the direction of the prevailing trend. And the prevailing trend at the moment, guys, is green. Green means good. Green means long, right? So the volatility is likely to expand in the direction of the long side, right? If this was red, it would have been bad, but it's green. It's good. On top of that, we also have some really, really good flags over here. Bullish divergence on the 12-hour time frame, bullish divergence on the daily time frame, and discount in the bullish range on the 2-day time frame, indicating that this could be a potential buy opportunity on the mid time frames, right? So this picture is lining up with what the macro tailwinds are telling us, right? That, hey, we might start seeing a resurgence in the crypto markets. At the very least, Bitcoin is giving us that picture, and it all starts with Bitcoin. Bitcoin does well, all coins will follow. Bitcoin takes out its highs, all coins are going to skyrocket. But we are ways off from that, right? We're ways off. We want to at least hit $42,000. What's that first trigger that we've been looking for Bitcoin to claim before we can even think about $42,000? Well, that final boss, guys, is the blue tankin over here on the Ichimoku. If we can start seeing candles close above this blue tankin over here, coming in at $28,300, if we see Bitcoin close candles above that, I'll be looking for that edge-to-edge trade to play out. Target $42,000. And at the current juncture, with all the tailwinds going in Bitcoin's favor, that is becoming an increasing possibility, an increasing likelihood. So we have the tailwinds going for us. Can Bitcoin do it? Well, we'll have to wait and watch. We still are going to be waiting for that trigger, guys. We still have to wait for Bitcoin to close above that weekly final boss. If we can do that, things are going to look extremely good. As for now, things are looking really good with some nice macro tailwinds going in our favor. So now I really hope you guys enjoyed this video. I know there was a lot, but if you made it this far, you're actually really looking to learn, and I really commend you. And speaking of looking to learn, I mustn't forget to remind you guys that Krisha's course is officially out, and she's currently running a discount for the early birds, a 50% discount. You also get 20% off any Mango indicator or course in the future of your choice, including the C program. She's also already dropped Module 2, and Module 3 drops this week. And I know what she has planned for the upcoming modules, and I seriously, really think that this price of $249 is far too cheap. So grab it while you guys can. I hope you guys enjoyed this video. My name is Sean Dexter. I'll see you guys in the next one. Ciao.